Hello traders, today's 11th of May. Mine's Evan Hornsey, market analyst trading, and today I'll be talking about trading the news. Okay, we're going to look at the euro versus the US dollar because it is essentially the largest component in the US dollar index, and we're looking to see if this can push the US dollar index above the 104 or if we're going to come back inside. Now we're looking at a euro, a USD weekly chart, and we can see that price action is currently very range bound. We're in within the previous range of the previous week and also in the week of the 24th of April. So if we were to get a break below this mother candle here, then that is a continuation trend signal towards parity. If we get a break above last week's high, maybe we're going to go and test the sort of resistance now from a 1.075 to 1.08. So currently price is compressing on the euro versus the US dollar, looking to see if the US CPI or some more other news from the ECB is going to sort of move us out of this range. So if we look at the economic calendar, we can see that later on today, the market's focus, probably for the week actually, is this US CPI, because that's obviously going to help drive expectations on rate hikes and things like that for the US Fed. Looking here, we had the ECB President Lagarde speaking at 9 a.m. And before that, we had German final CPI, which didn't surprise. And we also had Chinese year-over-year CPI, which did actually come in higher than expected and higher than previous as well. So lots of inflation data out today, lots of sort of central bankers speaking as well. So if the market focuses the US CPI, but we did have ECB President Lagarde speaking, maybe whatever she said today, move the market, and we're going to see that unwind or be accelerate in that sort of trending direction at 1:30 p.m. when we get the US CPI. So we'll look at the chart in a second. But first of all, ECB Lagarde did say that we have not yet precisely defined the notion of some time, but I have been very clear that this could mean a period of only a few weeks. After the first rate hike, the normalization process will be gradual. So they're seeing inflation rising. They need to get on top of it. Obviously, they think in the medium term that they're going to be on target for their 2% inflation. But that's what the Fed was saying last year. They thought it would be transitory. It turns out inflation can just do whatever it wants, regardless of what a central banker thinks. And now the Fed are going to have to try and get on top of it. They're having to expeditely move up the rate hike cycle, and the ECB do not want to do that. They want to keep everything forward guidance kind of within sort of ranges that the market can deal with without causing any crashes, because currently the Euro land is having to deal with their neighbor Ukraine warring with the Russia, and it's just causing more problems than is necessary, especially when it comes down to fuel, and that's obviously driving inflation as well. So Euro area interest rate is currently at zero. They're at ZERP, zero interest rate policy, and just looking at the weekly chart, we can see that for forever the euro is being either going sideways or lower. So we're looking for that to go lower, down towards parity, if we do get a breakout of, like I said, the mother candle from 24th of April. If we go down to a 1 minute chart, real intraday type of stuff, we can see here London Open started at 1.05. We did get a rise up to the ECB, sort of President Lagarde speaking. After what she said, prices went up again, 1.0575. If I just sort of pull out to an hourly, we can see that prices are really sort of compressing in this wedge, looking to see if we can get to 130 and then get a breakout of this wedge as possibly an early warning of which way the direction is going to go. We've got the 1 hour, 200 period moving average acting as resistance at the moment. So currently price is compressing. ECB Lagarde said something. We had a move up to that sort of trend line. We're now coming back down. So if we were to sort of think about trading the news, obviously these guys that we saw buying the market, they were long, assuming that the ECB are going to raise rates in a few weeks' time, start normalization of their monetary policy, but they've just seen their stops get taken. So the strategy is to wait for traders to get trapped and then to see them puke their position, and then for that sort of reversal, if you like, them to be trapped, then to puke, and then for the reversal to sort of really take place. Now, there are a couple of rules that we should consider. We want to see a new range high or low. So if we take yesterday's trading range as the high and low, we want to see on the back of the news those highs get taken or those lows get taken. And at the moment, we just saw a trade within, like I said, yesterday's range. So no No signal as such today, but obviously after US CPI, that might take us above yesterday's high, or it might take us below yesterday's low here. Another thing we want to sort of consider is the daily ATR. So if I go back to the daily chart and just scoot back towards the 6th of May, we had 5th of May here. So FOMC was the 4th of May, then we reversed that. And then since then, we've just been going sideways, waiting for this inflation data by the looks of it. So the ATR says on the 6th of May, the range was 89, well, the average range, should I say, was 89 pips. And if I just scroll to the right, it doesn't really sort of change. It's within 80 pips to 90 pips is the average true range at the moment on a daily basis. So if we go back down to the 1-minute chart, this is the ECB news. And if we had seen a 40 pip move higher, we would have broken through yesterday's high. Obviously, we didn't see that, but that would have been a signal to then wait for a retracement, for all these buyers to be trapped, and then for us to sort of look for a short. Obviously, the vice versa to that is we're waiting for a 40 pip move to the downside. So that would be 50% of ATR. Wait for a new break of the previous day's low as well. That would have obviously happened with a 40 pip move to the downside, and then wait for prices to retrace back up, trapping all of these sellers, and then we go long. But unfortunately, that didn't happen. So maybe when it comes to the US CPI, that's when we get a 40 pip move to the upside, depending on where we start. So ideally, we want to be somewhere around the London Open to where the ECB sort of news was. So to ensure that if we get a 50% ATR move, then we also get a new session high or low, and then we can wait for that sort of retracement, trapping all those traders short or long, and then we'll just reverse on them and see if we can continue in the opposite direction. So that's what I'm looking for. We didn't get anything really from ECB Lagarde. Hopefully the US CPI gives us another sort of bigger move. We're looking for a pump up towards 1.059 and then a reversal, or a sort of drop down to 1.052 and then a reversal. So that's the sort of way I'm going to trade this news coming out. I think it's going to be quite explosive, just going by the way the market is compressing into this sort of news release. I'm hoping that we do actually get some decent moves on the back of it. All right, so that's me trading the news today. Hopefully you all do well. Good luck, and I'll speak to you again tomorrow.